Welcome to the My Home Loan Underwriting Training, brought to you by the Michigan State Housing Development Authority. Benefits of a My Home Loan include competitive interest rates, down payment assistance, multiple products are available, assistance to help low to moderate income customers to become homeowners, and it may help the lender's CRA rating. Please note, MISTA is the investor on this loan. The lender's underwriter must approve the loan first. The loan and borrower must meet loan type guidelines and MISTA compliance. MISTA requires all adults intending to occupy the residence must jointly apply and credit qualify on the loan. This includes fiancés and significant others. The lender must have access to Lender Online. To receive access, send an email to the address listed. Once you receive access, you will be able to reserve funds, access forms, and other informational materials. The lender is required to review all training materials. This includes this podcast, the Homeownership Operating Manual, and the product specs for each loan type and down payment assistance. If you have questions regarding our program, please call our main line listed here. To receive the MISTA Lender Letter that will include program information, reminders, and updates, send an email to the address listed. Current interest rates are posted on our public website and on Lender Online at the addresses listed. For your closing department, there is a closing purchasing training for the My Home loans available on Lender Online on the bulletin board. Once you receive access to Lender Online, go to the login page and enter your username and password. To find the bulletin board, look to the upper right in the white area. On the bulletin board, you can find the current interest rates, other resources including the lender letters, training materials, brochures, etc. Brochures can be printed from here or ordered from MISTA at no charge. To reserve funds, click on the New Reservation tab, then on My Home Loan. Keep in mind that you will only see the programs on this page that you, the lender, are approved to participate in. Next, you will decide whether you need a loan without down payment assistance or a loan with down payment assistance. To reserve the funds, complete all items with a red asterisk. Then click Submit. A page will appear confirming your reservation. Print this page for your records. Reservations are valid for 90 days. This is your interest rate lock with MISTA. Reservations must be made on Lender Online. See Section 5 of the Homeownership Operating Manual for reservation restrictions. To find MISTA forms, click on Program Documents in the upper right corner in the white area. Click on My Home Loan, Origination Information and Forms. Again, you will only see programs that you, the lender, are approved to participate in. Under Program Documents, we list the required My Home Loan documents to be submitted. We will go over these documents in detail later in the presentation. Below the forms are the product specifications. There is one for every product offered with the My Home Loan. There is also one specific to the down payment assistance second lien. The lender is required to review the applicable product specification prior to submitting a My Home Loan to MISTA. In the second column, MISTA has supplied DPA worksheets for your use in calculating the down payment assistance allowed on your loan. Under Miscellaneous Documents, you will find the Homeownership Operating Manual. The lender is required to review the manual before submitting a My Home Loan to MISTA. MISTA always requires the lender to make a reservation using Lender Online. However, there may be times when the system is down or the borrower has had a prior reservation. At this time, you would fax over your reservation form to MISTA using the number on the form. Print this form for future use. The next three items you should print and use as tools when you have a prospective MISTA client. Print the targeted areas list and the income and sales price chart. You will need the targeted areas list to determine if the home is in a targeted or non-targeted area. This will then guide you to the correct area of the income and sales price chart to determine your borrower's income limit. The loan submission checklist will guide you in what is required to be submitted in a My Home Loan package and give you the exact stacking order of your submission. This is the process flow for the My Home Loan. First, you must have a signed purchase agreement. Next, you make a reservation on Lender Online and lock the interest rate with MISTA. The loan must be underwritten and approved by your underwriter. You will then scan the loan in the exact order of the loan submission checklist and upload it to Lender Online. MSHDA will then review the loan and, when approved, issues the commitment. The lender then closes and funds the loan along with the down payment assistance loan if applicable. The lender will then upload the closing purchasing package to Lender Online. Once reviewed and approved, MSHDA will purchase the loan. Before you start, verify that all adults intending to occupy jointly apply and credit qualify on the loan. This must include fiancés and significant others. See Section 8.3 of the Homeownership Operating Manual. Verify if the home is in a targeted or non-targeted area. Verify the borrowers meet income and sales price limits. And verify the property meets MSHDA compliance. See Section 12 of the Homeownership Operating Manual. Verify the borrower's DTI does not exceed 45%. Verify the borrowers meet the mid-score requirement of 640 and 660 for manufactured homes. Finally, verify the borrowers do not exceed the asset limit if they are applying for down payment assistance. See Section 9.6 of the Homeownership Operating Manual for a list of items to be included in that calculation. As stated before, all adults in the household or who intend to occupy the household must jointly apply and credit qualify. All adult children must apply unless verified they are a full-time student. If the borrower is separated, they must have a judgment of separate maintenance or supply a final divorce decree. If there is a disabled adult that cannot legally be included on the loan, the lender must submit verification of a conservatorship or guardianship with estate or property rights, or a formal letter from the disabled adult's doctor stating the adult is disabled and unable to enter into financial decisions. You must verify if the property is in a targeted or non-targeted area. This is determined by the legal description for the property. MSHDA has a targeted areas list. If the property is found to be in one of these areas, there is no prior homeownership restriction. This is the targeted areas list. The counties listed at the top of this list are entirely targeted. There is no prior homeownership restriction in these counties. For the counties listed below, only the specific areas listed to the right of those counties are targeted. If the home is located in one of these specific areas, the home is in a targeted area and there is no prior homeownership restriction. If the property is not located in one of these specific areas on this list, then the property is located in a non-targeted area and the borrowers cannot have had an ownership interest in a principal residence in the last 3 years. If the property is located in a non-targeted area, there is a 3-year prior homeownership restriction. MSHDA will require at least a 3-year history on the credit report with no mortgages showing in the entire history, or MSHDA will require 3 years signed federal tax returns or transcripts showing no mortgage interest deduction taken. If the borrower did not file a tax return, they will be required to complete an SFH 108 income tax affidavit for the year or years they did not file. The borrower must qualify within the income and sales price requirements for the area the house is located in. There are 2 types of income: gross household income, which must be calculated to verify the borrower qualifies for the My Home Loan program, and qualifying income that will be determined by your lender's underwriter. To calculate gross household income, the lender will calculate all income coming into the household and project forward for the next 12 months. The only exception to this rule is if the adult child in the household is a full-time student. See Section 8 of the Homeownership Operating Manual for household income calculation. As the lender, your underwriter will determine qualifying income as shown on the signed loan transmittal by following loan type guidelines. To find the correct income limit for the area the property is located in, you must first know if the house is located in a targeted or non-targeted area by using the targeted areas list we talked about previously. The top chart lists the targeted areas limits. First, find the county the property is located in, then look for the city or township listed to the right. If your property is located in one of these specific cities or townships, the limits to the right under 1 to 2 member or 3 or more member households applies. If you know your house is in a targeted area, but you do not see the county or specific area listed, the property falls under all other targeted areas listed at the bottom of the top chart. If you know your property is in a non-targeted area, use the bottom chart to find the income limit. Again, if the county is not listed, the limit falls under all other non-targeted areas listed at the bottom of the chart. The sales price limit statewide is listed at the very right of the chart. Eligible property types. MSHDA allows new never occupied homes. If you have a new construction, it must be the type that has a construction loan and then an end loan. The MSHDA loan would be the end loan. The home must be completed prior to loan purchase. A copy of the current builder's license must be maintained in your file. MSHDA will require the signed Equal Opportunity Builder Certificate to be submitted with the MSHDA loan. MSHDA also allows existing homes, new or existing multi-section manufactured homes built after 6/14/76, taxed as real estate and permanently affixed to the land, and condominiums. For FHA, the lender is required to verify the condo is insurable on both new and existing. For conventional, the lender is required to verify the project is eligible per FNMA and FHLMC guidelines. The lender's underwriter is to comment and provide all supporting documentation in the file. Property requirements. MSHDA requires a full appraisal with all utilities on and verified working properly. MSHDA does not allow generator test or pressure testing. If the property is on a private road or has a joint driveway, the lender must submit verification of a recorded permanent easement. The appraiser should state that any personal property has no value. Any repairs agreed upon in the purchase agreement or required by the appraiser can never be financed. Repairs should be completed prior to MSHDA issuing a commitment on the loan. MSHDA may allow a separate weather-related repair escrow on a case-by-case basis. See the Homeownership Operating Manual available on Lender Online for more information. MSHDA only allows up to 2 acres or 1 buildable lot to be financed. Exceptions to acreage may be granted on a case-by-case basis up to 5 acres. The property must meet all the requirements on the acreage waiver. See Section 12.6 of the Homeownership Operating Manual for more information. Maximum lot size. The rule behind the strict acreage and lot requirements is as stated. The proceeds of a MSHDA loan cannot be used to purchase land large enough to legally construct more than one house, or land that consists of 2 or more separate buildable lots. For example, if you have a property with a legal description that includes 3 lots, if the house sits on 2 and the garage sits on the other, this is fine. But if the house sits on 1 and the garage sits on 1 and there is 1 full empty lot, we will need verification this lot cannot be split off from this property and another house built. Additional documentation such as a survey and a letter from the local municipality may be required to determine compliance. See Section 12 of the Homeownership Operating Manual for all property requirements. Underwriting guidelines. MSHDA will not automatically approve loans based on decisions obtained from agency systems or the lender's underwriter approval. A refer finding requires a manual underwrite with compensating factors. At no time can the DTI ratios exceed 45%. The programs offered with MSHDA loans are as follows. FHA, with the transmittal HUD 92900-LT signed by the DE underwriter. FHA guidelines are to be followed. The MI is required to be financed in the first mortgage, and DPA is available to those who qualify. This covers down payment, closing costs, prepaids, and requires maximum financing. See the FHA product specifications on Lender Online. Rural development. RD underwriting guidelines must be followed. An RD conditional commitment is required with submission, along with a 1008 signed by the lender's underwriter. DPA is available to those who qualify. This covers the closing costs, prepaids, guarantee fee, and requires maximum financing. See RD product specifications on Lender Online. VA loans require maximum financing. The loan analysis must be signed by the underwriter. VA underwriting guidelines are to be followed. DPA is not allowed on this product. See VA product specifications on Lender Online. Conventional loans. The transmittal must be signed by the underwriter. The MI must come from either MGIC or ARCH using the Fannie Mae Desktop Underwriter HFA Preferred product or Loan Prospector when using Home Possible Advantage for HFAs. Conventional underwriting guidelines must be followed. DPA is available to those who qualify. This covers their down payment, closing costs, prepaids, and requires maximum financing. See conventional product specifications on Lender Online. Down payment assistance is available to those who qualify. The DPA is a 0% non-amortizing soft second mortgage. This loan is due on the sale, transfer, refinance, or repayment of the MSHDA First mortgage. The appraised value must support the sales price. We offer up to a maximum of $7,500 in down payment assistance. The borrower is only allowed what is needed to get into the loan, which includes their down payment, closing costs, and prepaids. You are not allowed to use the money to buy down the mortgage, pay for repairs, etc. It is only used for normal costs to get them into the loan. The borrower is required to have a 1% cash investment. As long as the closing disclosure shows the EMD or prepaids were paid by the borrower, these can be used towards the 1% investment. There is a $20,000 liquid cash asset restriction. All bank accounts owned or jointly owned by the borrower must be counted. This includes equity and real property owned. See Section 9.6 of the Homeownership Operating Manual for a sampling of items that are required to be included in the calculation of assets for qualifying for the program. We have DPA worksheets available on Lender Online to help you calculate DPA for the loan. MSHDA will use the estimates from the most recent 1003 details of transaction to calculate the DPA. Homebuyer education is required on all DPA-assisted loans. The borrower must use either a MSHDA-approved, HUD-approved counselor, framework, or eHome America. For more information on down payment assistance, see the DPA product specifications available on Lender Online. This is the FHA DPA calculation worksheet available on Lender Online. Take your sales price times 96.5% to get your base loan amount. Subtract that from the sales price to get the down payment. You would then add the down payment to the closing costs and prepaids to get a subtotal. Then subtract the borrower's 1% requirement and any seller concessions agreed upon in the purchase agreement. The end result is the maximum DPA allowed up to $7,500. Homebuyer education is required on all MSHDA DPA-assisted loans. All adults intending to occupy the household must be certified. Certificates are good for 1 year. The education must be from a MSHDA or HUD-approved counseling agency, framework, or eHome America. Credit requirements. The credit score requirements affect all adults intending to occupy the residence. MSHDA requires a 640 mid-score or a 660 if purchasing a manufactured home. If there are no scores due to lack of credit only, the lender is required to follow loan type guidelines. These will be evaluated on a case-by-case basis. Lenders are to follow loan type guidelines for payment requirements of student loans, collections, judgments, etc., and submit supporting documentation with the file. A satisfactory letter of explanation is required for derogatory credit. If a borrower is required to pay child support, the lender must get verification the last 12 months have been paid on time. See the Homeownership Operating Manual for specific requirements. If a borrower has had a prior bankruptcy or foreclosure, the lender will follow loan type guidelines for qualification. If a borrower has ever had a prior MSHDA foreclosure, that borrower will not qualify for another MSHDA loan. To verify assets, MSHDA requires the most recent 30 days of full bank statements that are less than 45 days old as of the date of loan submission to MSHDA. This would include all accounts owned or jointly owned by the borrower. MSHDA will also allow a VOD or automated asset verification as approved by loan type guidelines. Please note that MSHDA reserves the right to ask for full bank statements to evaluate the financial stability of a borrower and determine the loan risk in some cases. Non-DPA loans only require verification of assets to close the loan. If a gift is received, MSHDA requires all documentation to be submitted that is required by loan type. Any equity and real property must be disclosed on all DPA-assisted loans. Any subordinate liens other than MSHDA DPA require prior approval from MSHDA. See Section 17.3 of the Homeownership Operating Manual for more information. Miscellaneous requirements. All MSHDA loans are required to be uploaded to Lender Online eDocs in the exact order shown on the loan submission checklist. MSHDA reserves the right to require the lender to rescan and re-upload files not in order. Co-signers and non-occupying co-borrowers are not allowed. If you have a borrower who is separated from their spouse, they are required to submit a judgment for separate maintenance to qualify. Repairs can never be financed. A weather-related repair escrow may be allowed on a case-by-case basis. See Section 13.10 of the Homeownership Operating Manual for more information. Escrow accounts are always required on MSHDA mortgages. There is a closing cost chart available on Lender Online to inform you of fee limits and allowable fees that can be charged on a MSHDA loan. These can be found under the Program Documents, Closing Information, and Forms. Recapture tax. The borrower may be liable for recapture tax if they sell their home within the first 9 years of ownership. To notify your borrower of possible recapture tax, you can print from Lender Online or order the recapture tax reimbursement brochure from MSHDA. Most people will never pay recapture tax, and I will demonstrate why on the following slides. For example, the average household income on a MSHDA loan is just over $53,000. The recapture income limit chart will provide you the information you need by the county your house is located in and whether it is located in a targeted or non-targeted area. For example, we have a single borrower that purchased a home in Bay County, targeted area. The number under 1 to 2 member household is 85,920. We will go past page 2 of the chart to page 3. Look under first year and find the number 85,920. This number and all the numbers to the right of it are the federal income limits that apply to your borrower if they sell their home within the first 9 years of ownership. For example, let's say the borrower sells their home in year 5. If the borrower's adjusted gross income does not exceed $104,436, the borrower will not pay recapture tax. Considering our average household income on MSHDA loans is just over $53,000, it is unlikely most will ever pay. The only time we may see payment of recapture tax is if the borrower got married and doubled their income. They together may exceed the $104,436. If a borrower has to pay recapture tax, the tax is limited to 6.25% of the initial loan amount, or 50% of the net gain on the sale, whichever is less. The recapture numbers used in this example may not be current. The most current recapture tax charts are available on Lender Online under Program Documents. If the borrower has to pay recapture tax, MSHDA has a recapture tax reimbursement program. The borrower would send MSHDA verification their 1040 form taxes were filed and the recapture tax was paid, and the completed IRS Form 8828. MSHDA would then reimburse the tax paid. Once the file is approved by MSHDA, a commitment will be issued and uploaded to Lender Online. An email will be sent to the contact person listed on the mortgage loan data summary. The commitment is good for 90 days for an existing home and 180 days for new construction. Any changes that occur after the commitment is issued that affect property, sales price, loan amount, ratios, etc. must be approved by MSHDA prior to close. Remember, do not close without a commitment. Your commitment will look similar to this, with the lender, borrower, property, and loan information filled in. There will be boxes checked as guidance to what was included in this approval and guidance for your closing department. For DPA loans, the first box will be checked and the DPA amount entered in the required area. Please proof your commitment before you close the loan. Any changes after the commitment has been issued must be submitted to and approved by MSHDA prior to close. The 2-page loan submission checklist is available on Lender Online for your use. Please scan and upload your file in the exact order listed on this checklist. This checklist is not required to be submitted with the loan. The mortgage loan data summary sheet must be fully completed and be the first document scanned and viewed on every file. This form is available on Lender Online under Program Documents. The insurance or guarantee certificate is required. For FHA, that is the HUD 92900-LT, signed by the DE underwriter. For VA, the loan analysis worksheet, signed by your underwriter. For RD, the RD conditional commitment. And for conventional loans, the MI cert from either MGIC or ARCH when required. The 1008 transmittal summary, signed by your underwriter, is required to be submitted with conventional loans and RD loans. Include in the loan submissions the agency system's findings if used to approve the loan. The findings must match the transmittal signed by your underwriter. If there were any potential red flags present in the findings, these must be addressed by your underwriter in the comment section of the signed transmittal. Ratios can never exceed 45%. Any refer received requires a manual underwrite with compensating factors stated in the comment section of the signed transmittal. Handwritten comments in the comment section are not acceptable. The original signed 1003 is required to be submitted for all loan types and all adults intending to occupy the home. For FHA and VA loans, you must also include the 4-page HUD addendum. If your borrower needs DPA, also submit the most recent 1003 with the most current details of transaction. This is where the MSHDA underwriter will get the cost estimates for the DPA calculation. The Homebuyer Education Certificate is required on all DPA-assisted loans. All adults intending to occupy the home must be certified. The borrower must take the class through a MSHDA or HUD-approved counselor, framework, or eHome America. The Homebuyer Education Certificate is good for 1 year. Other applicant information required includes customer identification by either submitting a customer identification form signed by the lender or a copy of the borrower's driver's license. The Social Security numbers for all adults intending to occupy the home can be verified on a copy of a W-2, a tax transcript from the IRS, or a copy of the actual Social Security card. A 3-file merged credit report is required for all adults intending to occupy the home. See Section 10 of the Homeownership Operating Manual for more information. For verification of household income, MSHDA can accept a fully completed VOE or alternative documentation that would include a verbal VOE, a pay stub less than 30 days old and showing at least 30 days year-to-date income, and 2 years W-2s. If a borrower is self-employed, follow loan type guidelines for required documentation. If the borrower receives or pays child support or alimony, see Section 8.8 of the Homeownership Operating Manual for documentation requirements. For military pay, you would follow loan type guidelines for documentation requirements. See Section 8 of the Homeownership Operating Manual, Household Income Calculation. This will cover specifics for income types, other income, temporary income, reductions in income, and exclusions from income. For verification of assets, see the My Home Loan Submission Checklist for types of verifications allowed. If you are submitting bank statements, MSHDA requires full statements. These would include the name and address of the borrower, bank name, account number, all transactions, fees charged, etc. Transaction histories are only allowed to update assets after a full statement has been submitted. MSHDA reserves the right to ask for full statements to evaluate financial stability and determine loan risk on a case-by-case basis. If the borrower currently owns land or another home, MSHDA could require an appraisal for that property to determine any equity or require verification of the sale. If the borrower was quitclaimed off the property within the last 6 months, any equity from that property could be counted towards the asset limit for the DPA program. See Section 9 of the Homeownership Operating Manual for more information on assets. Any subordinate liens other than MSHDA DPA require prior approval from MSHDA. See Section 17.3 of the Homeownership Operating Manual. A purchase agreement or contract to build is required with every submission and must be signed by all parties, including all adults intending to occupy the residence. Seller disclosures and a lead-based paint disclosure, if applicable, and all addendums must be included. MSHDA requires a full appraisal. All utilities, which include heat, water, and electrical, must be verified on and working properly. MSHDA does not allow generator or pressure testing. The signed conditional commitment of appraised value must be submitted with all FHA appraisals. If you have a property that is over 2 acres but less than 5 acres, MSHDA requires a completed DOH 003 acreage waiver. This is the acreage waiver. This document must be completed by the lender and submitted to MSHDA if the property has a meets and bounds legal description and exceeds 2 acres but does not exceed 5 acres. All items on the acreage waiver must be addressed on the appraisal or by the local municipality. The property must meet all requirements listed on the acreage waiver to be approved. Any property over 5.00 acres will not qualify for MSHDA financing. The current form is available on Lender Online under Program Documents. To continue with property requirements, MSHDA also requires a flood certification and title commitment on every submission. The Initial Application Affidavit, SFH 106, is a 3-page MSHDA form that must be signed and notarized and uploaded with the original submission package. The current 3-page form is available on Lender Online under Program Documents. This 3-page document includes information on applicant eligibility, property eligibility, use of loan proceeds and cost of residence, a notice to buyers concerning the possibility of recapture tax, miscellaneous information, and false statement and criminal penalties information. All adults intending to occupy the residence must read this document in full, understand its contents, and sign and date the form. This form must also be notarized. Verification of prior residency is required for non-targeted areas only. This can be verified by a credit report that covers at least a 3-year history showing no mortgages in the entire history, or the most recent 3 years of signed federal tax returns or transcripts. If the borrower did not file in one or more of the required years, they will be required to complete the SFH 108 income tax affidavit stating the year and reason for not filing. MSHDA Underwriting reserves the right to require tax returns for other verifications if needed. This is the income tax affidavit SFH 108. This is only submitted when tax returns are required and the borrower did not file for one or more of the required years. The borrower must state the year and reason they did not file, and the form must be signed and notarized. The current form is available on Lender Online under Program Documents. Other requirements to be submitted in the loan include a certified true copy statement. This is a statement on the lender's letterhead stating the file contains certified true copies of the originals held by the lender. A loan estimate must be submitted, and if you have a new construction, a completed SFH 110 Equal Opportunity Builder Certificate must be submitted. The current builder's license is required to be retained in the lender's file. This is the Equal Opportunity Builder Certificate, SFH 110. This form is required for new construction only and must be signed by the builder. The current form is available on Lender Online under Program Documents. If there is a subordinate lien other than the MSHDA DPA, you are required to submit a copy of the proposed mortgage, note, and other pertinent documentation. See Section 17.3 of the Homeownership Operating Manual for more information on subordinate liens. Additional documentation may be required to explain any unusual circumstances of the loan. All loans must be uploaded to Lender Online eDocs. The documents must be scanned and uploaded in the exact order of the loan submission checklist. The mortgage loan data summary must be the first document viewed in your package and it must be fully completed. When you scan the MSHDA loan package, you must scan the entire origination underwriting package into one file. The appraisal can be scanned into a second file. If there are more than 2 files, the files must be specifically named as to what they are. MSHDA reserves the right to require the lender to rescan and re-upload files not in compliance. After uploading, don't forget to hit Submit. For more information on uploading, there is a training available on Lender Online under the Bulletin Board tab. Please note, MSHDA reserves the right to require any documentation that may be used to verify submitted loans are in compliance with MSHDA guidelines, loan type guidelines, and state or federal regulations. Remember, before you start, verify that all adults intending to occupy the residence have jointly applied and credit qualified. This includes fiancés and significant others. Verify if the home is in a targeted or non-targeted area. Verify if the borrowers meet income and sales price limits of the program. Verify the property meets MSHDA compliance. See Section 12 of the Homeownership Operating Manual for more information. Verify the borrower's DTI does not exceed 45%. Verify all applicants meet the mid-score requirements of 640 or 660 for a manufactured home. And if the borrower is asking for DPA, do they meet the asset limit? See Section 9.6 of the Homeownership Operating Manual for more information. Again, please note, MSHDA is the investor on this loan. The lender's underwriter must approve the loan prior to submission to MSHDA. The loan must meet loan type guidelines and MSHDA compliance. The lender must have access to Lender Online. To receive access, please send an email to one of the addresses listed. Access to Lender Online will allow you to reserve funds, access forms and materials, and upload files. The lender is required to review all training materials. That would include this training, the Homeownership Operating Manual, and the product specifications. Thank you for your participation in this training. For questions regarding our programs, please call the Homeownership main line listed. If you would like to receive the MSHDA Lender Letter, send an email to the address listed. Interest rates are posted on the MSHDA public website and on Lender Online. For the closing and purchasing of a My Home loan, there is a closing and purchasing training available on Lender Online Bulletin Board tab. Again, thank you for your participation.